I'd like to welcome all of you joining us today through our online platform. I'm very happy to report that 2022 was an exceptional year for the Society, whether in terms of profitability, positive impact on members and the wider community, or external recognition, and it's one that I look back on with pride. Now, as in previous years, I've outlined the importance of achieving good profitability in enabling the Society to improve service and value for members today, while allowing the Society to meet the needs of members in the future. As a mutual, our financial strength, or capital, is largely dependent on the earnings or profit that we make year on year. Over recent years, following the global financial crisis, the requirements for capital have become more stringent, and in the years to come, the requirements will likely increase further as legislators and regulators seek to enhance the robustness of firms and the financial systems in general. So I'd like to highlight some key areas of financial performance. The financial performance for the Society was very strong. Profit before tax of £17.5 million was more than double that of last year, which at the time was the record performance for the Society. Mortgage lending increased above £1 billion for the first time. A net interest margin increased from 1.82% in 2021 to 2.34% in 2022, whilst impairment remained low, being only £0.2 million for the year. The financial headlines are strong and reflect not only a great performance in the year, but also considerable effort from my colleagues over a number of years. We have worked hard over the last few years to restrict the growth in administrative expenses, but last year I indicated that the Society was entering a period where we'd see expenses increase. During 2022, continued investment into the Society in new roles, combined with the impact of inflation on salaries and non-staff costs, saw costs increase materially year on year. For those of you who have looked at our detailed report and accounts, you will note that once again we have reported underlying profits in addition to statutory profits. It is the underlying profits at nearly £12 million that I focus most on, and the main difference between statutory and underlying profit is the movement in fair value that contributes £5.6 million. The Society is required to fair value account for its derivatives that are used for risk management purposes and for movements in equity release mortgage book and the interest rate swaps that hedge it. But over time, all fair values will return to zero, whilst the trading or underlying performance of the business is better representative of how we are performing. As I mentioned earlier, financial performance is important because it supports our financial strength and funds our growth and future capability improvements. But this is only valuable if we can demonstrate value to you, and I define value being supporting our primary goal of improving the financial well-being of our members and wider community. In 2022, I'm proud of the contribution we have made, and I will share just two examples with you. We supported over 350 first-time buyers to buy their home, an increase of over 60% on the previous year. And we improved the savings proposition for children and young adults through the introduction of a Best Buy 2-year bond, and we were recognised in this space by Savings Champion as their best children's account provider. We recognise that to be a thriving modern mutual, we need to extend our impact and play our role in helping our heartland communities to thrive. Over recent years, the Society has extended its commitment to financial education for young people through our partnership with Wise Up, commitments to community giving through our Saffron Community Fund, and to the local community through our support of local clubs and societies. I'm very proud that we've extended our commitment to the community in the year through the successful delivery of two key initiatives. In February, we launched the Community Link Building, providing a space to be used free of charge by charities, community groups and not-for-profit ventures. And since its launch, it has been used by well over 50 separate groups and for a total of over 1,100 hours. The Society also joined the Alternative Reclaim Fund scheme, following a successful project planned, managed and executed by our retail branch team. In common with other financial institutions, we have accounts that have not been accessed for many years. They've become dormant. And the retail project team identified these accounts and sought to contact members to reunite them with these funds. During the process, we were able to reunite 275 members with over £620,000 of balances, and where the customers could not be reached, the residual funds were transferred to the Alternative Reclaim Fund. This process has been positive for those members reunited with money they had likely forgotten about, positive for members who can now seek out their funds at a later date because they can approach the Reclaim Fund, and also positive for local charity and community groups because the project identified over £400,000 of funds that could be transferred to our community fund and will be able to support good causes for years to come. Turning to the year ahead, what can we look forward to? Once again, as seems to have been the case every year, I start by saying that the current situation is volatile and/or the future is uncertain. Domestically, all of us are being affected by the highest levels of inflation we've experienced for over 30 years, and whilst the direction of travel seems to be downward, the consequence of the last 12 months is that most people are poorer in real terms due to increased cost of goods, energy and housing. At the AGM last year, I forecast that we would likely see several increases to bank base rate, and this has been realised over the year. Looking forward, it is perhaps a little too early to say that interest rates have reached the top, but markets and the Monetary Policy Committee are signalling that the future proposition on interest rates will likely be more benign. Where this leaves the economy is not clear. Though negligible, growth is currently positive, but rising interest rates, or monetary tightening, is usually associated with an intent to slow down demand within the economy, and given that the major driver of current inflation is more supply-side initiated, the risk must be that the economy stalls and enters recession. Whilst the cost of living pressure and the interest rate response is undoubtedly having a negative impact on individuals and families, we are yet to see a significant impact on the performance of the society. Arrears levels continue to be low, and following a period of strong growth, house prices have levelled off in many areas and fallen a little in some, but we are not yet seeing the falls that many have predicted for the year ahead. We anticipate that our cost base will increase again due to the continued impact of cost inflation and the annualised impact of the investments made during the second half of last year. We will seek to mitigate cost increases where we can, but in the current inflationary environment and tight labour market, our best means of offsetting cost pressure is through improving our returns through controlled growth. The society will seek to build from the momentum it has built over the last couple of years, and we will look to achieve controlled growth to mortgage lending whilst maintaining our underwriting standards that have served us well over recent years. By increasing our lending, we are seeking to build our savings balances again, seeking to deliver a balanced approach to growth. What's perhaps interesting, what is important is what we will deliver to our key stakeholders, our members, colleagues, community, and indeed the planet. And this is something that we are looking to reinforce with our For Years to Come strategy that we are launching this year. The positive momentum that I talk about is good for you, our members. As interest rates have increased, we have been able to increase rates to savings members over and above the increases that we have made to mortgage members, supporting both groups through a challenging economic period. We will continue to provide sustainable value to you to help our members achieve money happiness. We will strive to achieve our goal of being an amazing employer brand, and in 2023 we will continue to work to attract, develop and retain talent, developing an outreach programme with local schools and colleges and focusing on embedding a culture of inclusivity, diversity and belonging. We have been blown away by the response to the Community Link, and we will seek to develop this concept. We have also revitalised our community fund with an augmented grant panel and commitment to making more funds available to more good causes. 2022 was a tremendous year of achievement for your society, and I'm proud of progress that my colleagues have made and for the service that we can provide to you, our members. We have made a good start to 2023, and we have ambitious plans that we must follow through with to ensure that your society remains relevant as a modern mutual, and I look forward to working with my colleagues and your board to make this happen. I will now hand over to our Senior Independent Director and Vice Chair, Jenny Ashmore, who will talk through our remuneration report, gender pay gap, and also outline some of the changes to your board.